All right. What's up, guys? It's Chad. Some really interesting stuff in the market, so I just want to get right to it. First of all, let's see what we've got here. We have the TLT in our upper left-hand corner. This is the bond index, which has had some really interesting action. So remember, last time we were talking about this pennant that bonds were in, and they had just tried to break out right here, but failed, and just moved back down here. And it was right on this line, so it hadn't really broken out of that pennant, but look at this, straight down since then. So rates have been up, bond prices have been down. And if you have listened to me before, you know that I like to sort of oscillate between the TLT and the S&P. And down here in the right-hand corner, we have the S&P 500. And the interesting, excuse me, the interesting thing is, a couple days ago, my indicators said to start hedging the S&P 500, and it was right about here on the 6th. And we moved down for the past 5 days or so. And if you remember, even last week, we were talking a lot about sort of projecting where the S&P was going to stop. So if you look at right here about 209, and then right here where it's consolidating, which is right about 225. So I proposed that it'd be very possible for the S&P 500 to go up to 240 because that's basically symmetric, right? So this is basically 15 points. So a lot of times the market likes to be symmetrical. So it likes 50% basically. So if it went up to 240, or sorry, SPY of 240 or S&P 500 of 2400, then it would leave this consolidation right about at the mid-range. So that would it kind of works out. So it stopped right there, 2498. Right there you can see 2400.98. And it stopped right there exactly. And what some people were saying was that this pop after President Trump's speech felt a little bit like a little bit of a blow off top, like um, sometimes right at the end of moves, you'll get a big move to one direction or the other. So you'll get decent volume and a big move farther, like a pretty wide move as far as according to the ATR. So the average true range here was really small, right? We haven't had a move greater than 1% in a long, long time. And then we got one after that speech. So it kind of looks like that was a little bit of a blow off top, and we've decided to pull back here. So a few levels that I'm looking at. First of all, this level, which we've kind of reached, would be our first sort of level of support because we had a little consolidation there. Our second level of support would be the 50-day moving average, which is right here, wherever that ends up being, whenever that meets. A lot of traders will trade off the 50-day moving average. Then back down to this point, so right around 225, or sorry, I should say 2250. Like right in this area where it was consolidating, even a little bit higher than 2250. I wouldn't be surprised if it didn't make it all the way to 2250 because there was a lot of action right in this area. So all those people that bought and sold right there are going to provide a lot of support. And then if we break that, then we start looking at like the 200-day moving average, wherever that ends up being. It may very well be around this area, the 2200 range. And those are round numbers, so that makes it kind of easier. So we'll see when it actually finds some support. It may just find some support right here and keep going, but after this big run, I don't know how likely that is. It may just be running out of steam. And if you look at stochastics, we've fallen below 80. So a lot of times that's when I'll start hedging. So that kind of corresponds with the 6th. So it would have been good to start taking hedged positions. So of all the indicators that I follow and everything, the sum of that was to stay long the S&P 500, which would have served us well, right? Because TLT took a dip, and that's why the indicators work, because even if they're both going down, it'll generally keep you in the one that is doing the best. So you just want to avoid the one that's falling a lot. Um, so if this indicator goes back into the TLT, it's not going back into that like tomorrow or the next day. It's still got a little ways to go. But look, if you look at stochastics on the TLT, we're pretty oversold here. Not to say that, like back here it was oversold for, 4 or 5 days, but and it can stay there, but at some point it's going to pull back. So, before we were talking about if it breaks up, it would go to maybe 125 or 130. At this point, when you've broken down below this pennant, generally you get a pullback that's just about to this line. So wherever this line's going, a lot of times you'll get a pullback to that area. So, and maybe even to the point where they would have met. So we'll see. And this does not mean that you're going to get like a falling off the cliff kind of a thing. You could very easily just get more movement like this, because, and this movement may have been in anticipation of rates possibly moving when the Fed meets. So that may be pricing that in. So after that meeting, if rates go up after the Fed meeting, then they probably won't raise for another couple months. So you very well may get some sideways action. All right, perfect. Okay, the other thing I wanted to show you, which was really interesting, is oil. So this is crude oil, bottom left-hand corner of your screen. So big move today. So we had this consolidation for really kind of a long time. I mean, since December, really. So 3 months we've been just moving sideways, and boom, took a big move down. So you know how oil likes to move pretty quick. So we'll see. We're sort of already at this level of support right around $50. If we break down below $50, then all bets are off. You could see some movement way down to even 40. So if we make our lines, here we go. So you're sort of there at this junction of several areas of support. You got the 200-day moving average. You've got this higher lows pattern all meeting right there, and then the previous tops are right around 50 as well. So you're at quite a bit of support there. But if you break that, then you're looking at 45, 40. The next looks like it was 35 back here. Back last April, it was down at 35. So that's what we're looking at. But pretty interesting chart. Some really nice action today, so that was kind of fun. All right. Okay, well, everybody have a great rest of your week, and I'll talk to you later on. All right, have a good one. Bye.